Agriculture is still the biggest sector in the East African economies. However, we noticed that Rwanda is particularly slightly more dependent on agriculture than the other East African countries. Agriculture forms approximately 30% of GDP there. And Kenya is the only country in East Africa through the latest economic cycle that agriculture as a proportion of GDP has remained fairly constant. Agriculture as a proportion of GDP has shrunk in Uganda and Tanzania over the last 5 years. And moving on to manufacturing, Kenya is the only country in East Africa where manufacturing has a double-digit proportion of GDP. And the others are all single digits, with Rwanda being particularly low at manufacturing forming 6% of GDP. Finally, what we call the social services sectors, which are becoming fairly significant as well. Education as a percentage of GDP is particularly large in Kenya and Uganda. That's important. Tanzania and Rwanda need to invest in the sector because education is very key to transforming an economy to middle income levels and also to reduce poverty levels. Healthcare, the East African economies, healthcare still taking quite a small proportion of GDP. I think this is another area where we need to invest significantly because healthcare is also very key in terms, together with education, healthcare is very key in terms of reducing inequality in the economy. The other dynamic that I looked at was real GDP per capita. And just to put things into context, let's not forget the kind of challenges that the economy has faced over the last cycle. 2 elections in Kenya, actually 3 elections, if you will. Tanzania, an election in 2015. Currency depreciation in 2015 across all East African countries, elections in Uganda in 2016, the rate cap in Kenya in 2016, and also some policy decisions in Tanzania that have sort of proven to be quite challenging for the private sector. So in spite of all that, you can see that what we identified here is that the GDP growth in Kenya, Uganda, and Tanzania in particular has been more than double the population growth rate. So the GDP has grown twice at the rate of the population. That's despite all the respective headwinds that the East African economies have faced over the course of the last cycle.
If you look at the balance of payment, oil had predominantly been one of the large components of our imports. But if you also go and look at the historical numbers, consistently that number has come down. As a percentage, I think there's one time that oil was almost 30% of our our imports, but that is no longer the case. So even as oil prices rise, yes, they are a concern that if oil were to rise to levels above $100 per barrel, that would pose a challenge. But considering that its significance has come down, then we do not foresee our currency getting challenged to the extent that it gets out of hand. I think the governor has enough tools that can mitigate drastic movement of currency from the, to a depreciation that would ordinarily hurt the economy significantly.
Manufacturing has been under a lot of pressure from competition, from countries like China, where we've been manufacturing, Asian countries. So what has happened is that most of our manufacturing companies, some of them have actually closed, some of them have basically slowed down. And the services as a sector has basically increased in terms of prominence. So as much as we are feeling like manufacturing is under pressure, but what I always tell myself is, what are we good at? What can we do best? We cannot compete with manufacturing with China for now. My suspicion is that the services industry and other sectors like real estate might as well actually overtake manufacturing as a sector.
Our outlook for 2017 was that we will have a growth rate of slightly below 5%, and I think that still remains the case, especially if you look at the GDP numbers for the up to quarter 3 of 2017. I think we were about between 4.4 and 4.7%, and we expect that if you transpose that now to the full year, and I think we expect the results to be coming out shortly, maybe within the next few weeks. Our outlook is at about maybe just below 5% for 2017. For 2018, probably about 5.5% for GDP growth rate. Of course, we know that the backdrop of this performance is last year. We had a challenging year with 2 elections, and that therefore contributed to the lower GDP growth rate that when you compare that to the performance in 2016. And again, as my colleague has alluded, the fact that we have lower political temperatures in 2018 therefore gives us confidence that we are likely to have at least a slightly higher GDP growth rate for 2018.